Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. We also have Andrew Cox with us with a shipper update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update today, this Tuesday. Hopefully everybody's having a good one so far, presented by PowerFleet, of course, and I'm Zach Strickland. So we're looking at tender volumes, which is, of course, the thing that everybody is concerned about right now, as we are awaiting this massive collapse of volume, as everyone is predicting and expecting, because all of the jobless claims going on out there, there's only so much toilet paper you can purchase. When is it going to fall down? Now, it has started to fall down a little bit. We're looking at the van outbound tender volume index along with the reefer outbound tender volume index. Apparently people have started to not get as much supplies in their warehouses as they were before, but it's still quite high. Keep in mind that the index is still way above Christmas levels. We're not seeing some sort of like epic collapse. These are not things that are just going off the road all of a sudden out of nowhere. We still have a good healthy level, and if you can see here down at the top, we're not falling dramatically. We have just a little bit of a hiccup here, and again, some of that's the weekend, but it's still not falling as quickly as some might expect. Van and reefer volumes both showing pretty good stability. Looking across the country, however, day-to-day volumes, looking at the red here, outbound tender volume index, everything in red has fallen day over day. Again, we're not coming down dramatically, but we are on the way down in general terms. Looking at over here in some of the bigger markets of the country, however, Atlanta, Harrisburg, and down here Joliet, all showing day over day increases in volume. This is not going to be simply an even drop across the board. We're going to have some markets that have these little, intermittent movements, especially in some of these bigger markets here where, you have a lot of warehouses and DCs and other things like that need to continuously supply, medical supplies, and the grocery stores, all the Walmarts, the Home Depots, and the Lowe's out there are going to have to be replenished over time. These are still considered essential services. So truckload volumes are coming down, but they're not coming down evenly. It's not simply just going to fall like it has, increased. So looking at some of these other smaller markets, you can see a lot of the green is positioned down here in some of these smaller markets of the country. That's the way the tree map works. Going from top left to bottom right, it's going to be the largest up here and the smaller down here. Cincinnati, Ohio showing a 7.3% day over day increase. Omaha, Nebraska, Chattanooga, Tennessee, in the rain today underneath, got about a 4.1% increase. Roanoke, Virginia, looking for, you're really looking for any of these markets that are showing, significant volume increases, because that's going to put these markets at risk for further destabilization in terms of tender rejection rates and capacity, and then the spot market, of course, will follow. Rock Island, Illinois, probably the big jumper of the day, 8.8%. We'll get to that one here in a minute. But here's what I mean in terms of just the volumes themselves are not falling precipitously throughout the United States. These are the three of the bigger markets that I pointed out on the tree map there. We've got Harrisburg, Atlanta, and the Joliet market. Represented in the outbound tender volume index here. You can see that Atlanta, of course, is staying. It actually has a little bit of a bump there at the end. It fell pretty hard last week, but now it's starting to resist that bottom line just a little bit. Not saying that it won't come back down, but there is some intermittent stalling right here. So that's going to keep capacity tighter in the market longer, the longer that these types of interactions occur. The rest of them, you see the same thing. These are the bigger markets in the United States. Joliet is right there south of Chicago. So the longer these volumes stay high, that's going to keep capacity destabilized longer. So it may not be a mid-April. It's probably going to be a little bit later in April before we start to see things kind of come back around and come back to normal. Rock Island, Illinois, like I said, the big market of the day. We're looking at the outbound tender volume index for Rock Island. You can see a huge jump up there. Tender rejection rates also in the purple line, the faint purple line right there. You can see those are jumping up too. Strong increase if you look up here on the top about the outbound tender reject volatility. So this is a statistically significant jump week over week in the Rock Island market. Rock Island is, of course, located right around Davenport, Iowa, here just to the west of Chicago. A pretty big little sector of shippers sitting right there. So all lengths of haul are increasing as well. So Rock Island, the big market of the day if you operate out of that. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning. I'm Luke Falasca bringing you another broker update. So hopefully everybody is staying safe out there. It's still a pretty crazy time out there, but we're still giving you great updates. So this blue line here is the volume level in the United States. No surprise there. We saw our peak about a week ago and we started to slide. We all knew the slide was going to happen, right? Now, it's not necessarily going to be a complete free fall. We'll look at some areas. There are actually some areas that are increasing in volume, but as a whole, the nation is coming down. But there will still be great opportunities for you to find until we get back to normal levels. So now this orange line here, those are the tender rejections. So we're sitting at about 18.3%, only a slight little dip there, nothing crazy, right? I think we peaked out at about 19.5%. So that is coming down. It probably won't come down, quite as fast as the volume levels are. You'll see that remain tight as capacity is still high, as well as the coronavirus, continues to put a little bit of a scare and tightening in the market. But let's go ahead and look at this map real quick. So this is the overall volume level in the United States, the weekly change. So the markets in red are markets that are contracting weekly. The markets in blue are markets that are growing, and then the white markets are fairly balanced or unchanged. So you can actually see there's a fair amount of weekly growth in terms of volume level. A lot here in the middle of the country, especially as you get south of Chicago, there's a little bit of growth there. As well as a little bit there in the Virginia and Tennessee markets. So there's a little bit of growth going on in the markets, while there is definitely some red, especially in these big markets over here on the west coast of California, like LA and Stockton and San Diego, and then a little bit there on the border of Laredo. There's still a good amount of areas that are growing. So there will be some areas that will continue to expand as volumes fall. So if you're looking on areas to call, I'd focus on some of these areas here in West Virginia, maybe a little bit there in Savannah. Also Tennessee looks to be a good place, and then it looks like Portland as well. Otherwise, volumes will continue to slip on the west coast as well as southern Texas and a little bit there in the northeast. The market we're going to focus on today is Philadelphia. So one of the things that we're seeing as tender rejections continue to fall or start to fall, that's a great opportunity to increase margins as brokers. I imagine a lot of you are seeing increased volume levels but reduced margin levels. So this is a great opportunity to start to expand those margins again. We saw this big run up here, this blue line. We expanded to just about 20% tender rejections out of Philadelphia. This is for dry van freight, if you're wondering. And we've fallen pretty rapidly to just under 16%. That's a great opportunity. If you moved a load a couple days ago, lower your rates to your carriers now. You have the ability to do that. The market, while it's still tight, is beginning to loosen, and it's loosening at a faster rate than the rest of the country. So this is a perfect opportunity to expand your margins out of Philadelphia for any dry van freight that you have. Now, we're also looking at reefer freight. It seems that this is actually falling a little bit faster than dry van freight. So around the 15th, we spiked up from about 4.5% all the way to about 16% reefer tender rejections. And we're falling. We're already down to 7.9%, meaning that reefer is getting a lot looser in Philadelphia, and you can push carrier rates down as they are more willing to accept those loads. So if you're moving a load out of Philadelphia for dry van, you can push those rates down slightly on carriers. If you're moving a reefer load out of Philadelphia, you should be able to push it down a good bit and make some good money on those loads. That'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your Shipper Update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Tony, today we're talking about the University of Michigan Consumer Sentiment Index. It came out last week, and this is a good index because it's also very topical, and it comes out the month of, so it comes out for March, at the end of March. Excuse me, in February we were at 101, so this is an index that dates back to 1960 and started at 100, so basically any level over 100 is a little bit seen as expansion. We were at 101 in February, and this number came out last week and it was at 89, so this is below expectations, and it's fallen substantially in the back half of March. This is a survey that's done by phone. Over 500 phone calls are made to consumers all over the country, and they're made throughout the month, so I actually think that number is probably a little bit lower than that 89 because some of the calls were made in the beginning of the month when the coronavirus wasn't quite scaring us as much.
Right, and you mentioned this has quite a long history, over 50 years, and I think this most recent decline is one of, I think, top 4 steepest declines over the last 50 years or so. And another good point that you mentioned is that those surveys go out a little bit earlier on in the month to really capture the sentiment overall, but as you mentioned, a lot more decline likely to come as we move forward, right?
Yeah, I mean, this thing bottomed out all the way in the 50s back in the Great Recession, so we have a lot of room to run towards the bottom side when it comes to historical precedents of this. And I think this index is going to become of even more importance over the next couple months because we're going to be able to keep a pulse on the consumer economy while most of the consumer economy shut down. So I think this number will fall much more in the next probably month, or it may bottom out in May, but I think we'll have a quick recovery upwards as things start to open, people get back outside, they spend money at things other than grocery stores, at their favorite bars and things of that nature.
Right, so a lot of things going into another aspect that might go into it is the containment of the coronavirus and potential outlook towards government support when it comes to subsidies, correct?
Yeah, of course. I mean, if we don't get this thing corralled by the middle of summer or such, this number could drag along down near this Great Recession levels for many months on. And right. When consumers really don't feel confident that this thing is contained, I think that's the biggest thing for consumers before they get back outside and do things. I think about going back to the store, going back to the favorite bar may be one thing, but going out and going to a baseball game or a museum where there's going to be a much larger crowd, that's going to take a lot more confidence that this thing is contained, fully contained.
Right, and then it's just one aspect of it all, right? I mean, last week we really chatted about jobless claims. That was really very impactful, but even if, say, jobless claims were low, employment was coming back, things like that, if consumers don't have the confidence to spend, they're not going to go out there, and as you mentioned, have these activities or really kind of spur the economy at all.
Yeah, exactly. They may even feel confident to go out and spend on little things, but they're not going to buy those big ticket durable goods that we need to keep our economy pushing forward and to really snap back and try to make up for some of this lost productivity and loss of demand over the past couple months.
Got you. And so what kind of impact do you think that's going to have on the shipper side of things?
Well, on the shipper side of things, you got to think about your demand for your products. So we're already, we had kind of already seen the expectation. We've already kind of seen it play into these volumes. We were expecting this fall. We know that consumer sentiment it had to have peaked earlier than this, and that it's going to make a big play against the shippers and their demand for their goods. So if you're one of these big durable goods items, people producing things for the home, dishwashers, cars even, these are things that people aren't going to be looking to buy. They're not going to have the confidence in the economy to go out and spend money on these big ticket items. So if you're in that industries, this is something you should be watching very closely.
Definitely, as you mentioned, a lot of non-essential potential big ticket items not being purchased, a lot of potential disposable, and some longer shelf life, things like toilet paper, paper towels, a lot of those purchases being pulled forward, but not quite enough to sustain the rise that we've seen in the volumes right now. Andrew, thank you so much for that overview.
Welcome, Tony.
And that's going to do for the shipper update, and also that's going to do for this Tuesday edition of FreightWaves Now. Thank you so much for tuning in. We're always streaming around the clock, so be sure to check us out on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.